and gentlemen, welcome back. My name is Bhavna Bhatia, and right now we're on our panel discussion on how is AI enhancing and rewarding the financial services industry. Well, a great topic right there. Artificial intelligence has given the world of banking and financial industry as a whole a way to meet the demands of customers who want smarter, more convenient, safer ways to access, spend, save, and invest their money. AI in finance is transforming the way we interact with money. This panel discussion will discuss how AI is helping the financial industry to streamline and optimize various processes. We're looking at talking about real-time fraud detection, cost efficiency, relevant customer engagement, enhanced banking products, and better security. Well, joining us now on the stage and screen, first up are going to be our esteemed set of panelists. Lito, Villanueva, Executive Vice President and Chief Innovation and Inclusion Officer, Rizal Commercial Banking Corporation, which is the RCBC. Well, Lito has over 25 years of experience in banking, telecommunications, payments, development, finance, advisory, emerging regulations, and financial technology, meriting over 60 global and regional awards, including the next one. So thank you so much, Lito, for joining us today and being a part of our wonderful show.
Thank you so much, and good morning to everyone.
Good morning. Joining us now on the screen is Andy Chun, the AI Pioneer Regional Director, Technology Innovation, Prudential Corporation Asia. Well, Andy is a leading AI pioneer and a global visionary with over 3 decades of technology innovation experience. Currently, he's the Regional Director of Technology Innovation for Prudential Corporation Asia. Thank you so much, Andy, for joining us today.
Thank you. Thank you for inviting me.
Also joining now on the screen is going to be Dietmar Bohmer, the Chief Analytics Officer, Tyme. Well, Dietmar has lectured in the actuarial field for a couple of years before he joined the banking sector 17 years ago. He spent time at the Netbank and Standard Bank leading and building various lending, data science, machine learning, and big data teams. Thank you so much, Dietmar, for joining us today.
Morning all, thanks for having me. Looking forward to the discussion.
Also joining now on the screen is going to be Sasho Markov, the Chief Technology Officer, Valutex Exchange. Well, somebody who's a Senior Technology Manager, Executive Director with over 20 years of valuable experience in the first-tier investment banks in leading strategic projects for cross-assets trading and risk management systems. Thank you so much, Sasho, for joining us today. I believe you're on mute.
Good morning, everyone. Sorry for that. Thank you for the introduction, Bhavana, and I'm honored basically to be part of this webinar. Thank you.
Thank you so much. And ladies and gentlemen, it is now time to introduce to you the moderator of the session, who is Reynaldo Lugtu, founder and CEO, Hungry Workforce. Well, Ray, being a fellow of US-based Institute of Digital Transformation, he's also the chairman of the ICT Committee of the Financial Executives Institute of the Philippines and the vice chairman of the ICT Committee of the Management Association of Philippines. Thank you so much, Ray, for joining us today.
Good morning, everyone.
So ladies and gentlemen, now with this, our panelists are on the stage and screen. If you may have any questions directed to them, please post it up in the Q&A section. We'll take it up at the end of the session if time allows. With this, Ray, it's all yours with your panel. Over to you.
Thank you, Bhavna. So indeed, artificial intelligence has given the world of banking and the financial services industry as a whole a way to meet the demands of customers who are different now. So this panel discussion will discuss how AI is helping the financial services industry to streamline and optimize various processes. Well, we have an esteemed and powerful cast of panelists here. Let's start with you, Andy. Andy, so
yeah.
What are some of the applications and use cases of AI in your industry? So, can you give us some concrete examples, Andy?
Okay, so there's out there a lot of examples where AI could be used. And at Prudential, for example, we use AI for a wide spectrum of things. You know, the traditional things like, you know, fraud detection, customer engagement, enhancing our products and services, or for information security, as well as, of course, to do things cheaper, faster, and better. So, you know, we use AI basically everywhere across our whole value chain. But most importantly, I think, is in our customer-facing AI app, which we call Pulse by Prudential. It's most valuable use for us because it helps us better understand our customers. Back when we started, you know, Prudential is a 170-year-old company. In Philippines, it's called PruLife UK. And back in the days, we have agents and financial consultants visiting each customer to collect a penny, just a penny for each person insured. And because they visit, you know, every week or even, you know, every month, they become close friends, and they were like part of the family. They got to know everyone, all the relatives, all the neighbors, and our agents were trusted advisors. So it was easy to know exactly what our customers' needs are and offer them the most appropriate products and services, as well as identify opportunities to cross-sell and upsell as their needs change. But in the digital world, we lose all that. You know, what we need is data so that AI can learn and gain insight on each digital user, you know, just like the good old days. Unfortunately, traditional insurers do not have that type of data. We only have product data and claims data, policy data, things like that. So what we've done at Prudential is create a digital ecosystem and platform to collect user data so that we can better understand their specific needs. You know, our ecosystem caters to health, wealth, as well as SMEs. It contains a range of complementary services that we offer, as well as services offered by partners. And that's one of the key benefits of having ecosystem, is that you're able to expand your network and capabilities in many dimensions. And that, you know, that means, you know, that translates to more data collected. So through interaction in the ecosystem, we collect an enormous amount of data points that allows us to precisely understand who the user is, his or her age range, for example, gender, income level, whether he or she has a family, etc. And with data, we apply AI machine learning to predict needs and personalize content and services, thus driving customer engagement and improving customer experience. Another area that we use AI a lot is in our app functionality. So on the health side, we use AI for fitness, wellness, dieting, chronic illness management, 3D digital twin health check. For a specific example, we have an AI doctor, is a chatbot for symptom checking, which is one of the most sophisticated around. It's like an encyclopedia of medical knowledge. It goes through your symptoms and determine if it's serious or not, and whether you should see a doctor immediately. And if so, you know, we provide telemedicine so that you can see a doctor via your smartphone. In some countries, we also have e-prescription and delivery to your home. So we have a similar range of services for the wealth side as well. For example, AI financial planning, robot advisor. We use AI to nudge users to save money, to fulfill their financial goals. AI makes app functionality smart and fun. On the back end, of course, you know, we have AI underwriting, AI claims, AI fraud detections, you know, all the obvious ones. So in summary, I think AI's main benefit for the banking financial services industry is really to improve customer experience, making it fun and enjoyable. On the business side, data and AI allows us to better understand customer needs so that we can offer the right product or services to the right person at the right time of their life and at the right price.
Wow, a lot of use cases and applications, Andy. You mentioned the real-time fraud detection, cost efficiency, customer engagement, and enhancing the product features and better security. We will drill down on those. No? Thank you, Andy. Now, Sasho, no? Let's drill down on cost efficiencies as one of the applications. No? Have financial services companies gained significant savings from AI or even RPA? No? And have these resulted also in layoffs or reassignments as a consequence?
Hi, good morning, everyone. All right, so Thanks to the recent innovations in the cloud computing, basically, and then big storage analysis, artificial intelligence is making a lot of strides to improving the efficiency in the financial institutions, and also leading to better performance. Some analysis basically show that it is compounded growth rate of 52% from 2017 to 2025. Machine automation, basically, in general, is critical, basically, to provide information and have the managers to make informed business decisions. But there are hurdles there, and although the opportunity is great, there are certain aspects which has to be considered when it comes down to the artificial intelligence and robotic automation. Specific challenges basically are related to the integrating a vast amount of data, also basically to create a real-time insights. We have to go back basically to some way of having a well-defined measure basically for the artificial intelligence cost efficiency. McKinsey did a survey, and actually 63% of the large institutions have increased basically revenue, and 44% basically have reduced their cost across the businesses. However, basically there is also a statistic which basically says that about 28% of about 2,000 enterprises basically fail in implementing artificial intelligence and machine learning, and basically either provided non-efficient or non-realistic information for decision makers. The challenge is obviously to do when we do analysis on the cost effectiveness, we must be able to put some measure to it, and it's the good old measure basically, which is return of the investment. I mean, it's a classical formula which basically you subtract the gains from the investment, to divide the investment, and you get some number which basically tells you how you're doing. However, basically it's not as easy. In the artificial intelligence, in the machine learning projects, basically, they're all experimental by nature, which makes it almost impossible to gain a pure, clear view on the gains on the investment and actually just to put a formula. And then when we define the gains, we have to consider the number of points. And we increase the productivity. How we go basically incremental revenue? Do we lower the overhead? Do we lower the operating costs? Are we getting more customers, or basically getting more business per customer? Now, we can put this list, it goes on and on. I mean, you can look, given the nature, as I said, basically experimental nature of artificial intelligence, you can add as many aspects basically which effectively artificial intelligence is trying to address. But when it comes down to investment generally, basically, you think about what is the infrastructure cost. So how much is going to cost me to upgrade my IT infrastructure to support AI and then machine learning and robotic automation? Am I getting anything out of the taxes? And I'm going down basically to the real nitty-gritties, because sometimes with these projects like this one, you might end up actually throwing bad money at the good money. So we have to be, no matter how experimental it is, we need to have basically this real view on what we're putting and where we're putting the money. So as I mentioned, taxes, then is the inflation, i.e., well, I mean, we put something actually into the system in 5 years' time, we produce a project which is already old. We have to replace it because it took a long time to develop it and effectively inflate it in a way. Do we get any opportunity cost, i.e., what happens basically with the resources, with the capital, and also the investment horizon? How long it goes basically from a prototype to go to production? So in general, basically, we could define it as a free return of investments. One is the measurable, which you can have all the gains and see, we can put some number there. It could be strategic return of investment, where we differentiate what we get now and what we get in the future, and then compare and give us some view of what we're going to get out of AI. And capabilities. I mean, what has happened with our firm in terms of getting actually the IE implemented? Which of those to use is probably a matter still for the human beings to decide how to implement this return of the investment and the cost analysis. Because on the surface, we all hear, and we're bombarded with publicity related to what are the benefits of the return of the artificial intelligence. But we should not forget that the artificial intelligence is as intelligent as we are. And in us, we know basically how difficult and how long it takes to build this intelligence for the humans, let alone for the machine. By saying all this, I do not for a second try to undermine the value. And as I said already, I started my session with a 52% growth, basically, of compound annual growth for 2025, which is actually quite close. It's knocking on the door. But we need to be careful, and actually we need to be able to evaluate the potential of the artificial intelligence. I would call them basically our partners in the future, and they provide tools which we have to assess their capabilities. And that analysis basically, as I mentioned, can use one of these three elements. Obviously, each organization has its own spin on it, and based on experience add to that. But bottom line is, we cannot just go and actually say, okay, for us, let's go artificial intelligence full stream, because at the end of the day, it's all about investment.
Interesting insight, Sasho. No? So, you mentioned some statistics on the impact to revenue and cost, no? But we need also to evaluate what kind of metrics we need to consider when investing in AI. Let's move to Lito. No? So Lito is leading the innovation in RCBC, and as a result have received numerous awards. No? So do you see more or better customer engagement with the use of AI? So is it really generation dependent? Or, what generation, what kind of customers engage with such applications?
Thank you so much, Ray. And again, good morning to everyone. And it's nice to be here with this esteemed panelists. I think to answer your question, today's generation of what we call the Gen Z or the Gen Zs and millennials are practically generations that have lived through everything instant and everything not instant, being easily replaceable to them. So if I may say, they are the digital natives, the techies, the trendsetters, the champions of functionality. So they have been conditioned with the convenience of having most things, if not everything, easily accessible 24/7. They don't wait for TV episodes, for example. They stream all at once and binge watch shows they want when they want to. Like, for example, that's why we have seen the exponential growth of the likes of Netflix and the like. So they put premium to having control over their lives, how to consume content, when to consume that content, and where to consume the said content. They are platform agnostic. They want their products and services easily accessible, regardless if they switch from the web to an app. And of course, Ray, we know this, especially in the Philippines, because we have the median age for Filipinos would be around 24 years old. So we have a very young population. And these two generations are very self-aware. This is why they appreciate everything that can make their lives simpler and will help them stay put, so they can channel their efforts and energy to their many other interests. So I think one thing that we can describe the millennials or the Gen Z, would be they are so impatient. They really want to see things as fast as possible. No? And this is why AI enhancing is enhancing the digital banking for us to become more relatable and more engaging to this generation of millennials and Gen Zs. So with this segment of the population being the most tech savvy and most influential in terms of getting others started in using technology, using AI helps them connect with digital banking apps more. In fact, we have also seen in households that, in fact, the children would be the one teaching their parents or even their grandparents on how to use the mobile apps. So they see AI as something that makes their lives easier and their transactions faster. Fast and easy are two basic points that these segments value when it comes to technology. But on top of that, they also ask for reliability and personalization, among other things. But with AI, digital banks are able to deliver this. And I think we have seen quite a number of implementations, deployments, especially in the midst of the pandemic, that even the traditional banks, for example, have actually shifted to becoming challenger banks, no, or what we call the neo banks. And of course, we welcome the entry of more players in the industry, especially the digital banks coming into the country, as well as the leveling up of other players, so that at the end of the day, the ultimate winners would be our consumers. Thank you.
Great insights, Lito. Yes, indeed. The younger generations now, they consume a lot of applications and content, and AI is truly helping that. Let's move to you, Dieter. No? So you are leading the analytics team in Tyme. Are financial services customers more protected with the use of AI, by financial institutions? And do you have some examples to cite?
Yeah, no, thank you. And hi, everybody again, and thanks for the opportunity. So yes, there are most definitely, and there are actually quite a number of specific examples where AI gets used to protect customers. The first one is the obvious one, and Andy has already spoken about, and that relates to fraud. There's a lot of creative people out there that are trying to get access to either your money, so they're trying to find ways to physically get into your bank account. So the bank's running a lot of AI in the background to make sure that the person that's trying to log into the bank account is the individual that's actually the owner of that bank account, whether or not it's profiling the device or it's profiling the method in which the customer is engaging with the device. Everybody almost has a digital footprint based on the devices you use, as well as how you interact with your device, how you use the keyboard versus the next person engages with the keyboard. Everybody has a very unique style. So making sure that you've got all of those types of measures in place to protect the customers and making sure that their money is safe, but also their identity. That's another big focus area for the fraudsters, is trying to steal somebody's identity, and on the back of that, use your good credit profile to apply for a lending product. Those are sort of the obvious ones. But if I think a little bit and take maybe sort of a different view on sort of protecting customers, and something that we focus heavily on as an organization in Tyme is financial inclusion. And a lot of customers that are not currently fully served or part of the financial system, they have limited options, and people with limited options tend to get exploited, whether or not it's for cost or process or whatever. So that's also a big part where we've seen AI play a really, really big role in just leveling the playing field and making sure that more people get fair access to financial services and stop the predatory practices that are out there that are being used to exploit people with limited access to financial services. And it's really across three pillars that you sort of need to break down this access. The first one is physical. A lot of people are in rural areas. The physical infrastructure is not there. The banks can't justify setting up a big bank branch in that environment. That just doesn't justify the cost. So once again, AI can help bringing that financial services product that sort of within a meter of a customer. It's on their phone, it's on their device. You use the AI to do the KYC of the customer. You can identify them. You can remove all the barriers to get them onto the platform with the technology that's out there. And something that Sasho has spoken about is just the efficiencies that AI brings, that once again helps you to reduce the cost. A lot of people are excluded from the financial services because the cost is just a barrier to them. It's just too expensive. They just don't get the value from it. Being able to do a lot of this automation in the background, removing a lot of the physical costs, also means you can reduce the price and thus service a bigger part of the market, and thus give them access to financial services in an affordable way to them. And then the last one that we found that's a real barrier for people to enter the financial system is that it's a very intimidating environment. People find it very intimidating to go to a bank branch. I have to engage with someone. These are products I don't understand. What are they going to think about me? Or they're going to explain 7 different accounts to me and I need to choose. How am I going to choose? People find it very intimidating. So having the ability to sit in the comfort of your home, having an AI bot in the background that guides you through the process, gives you advice that's suitable for you. You can actually take in that information, and you're not sitting there in front of a person, have to make a decision now, and you've been overwhelmed with all this information. That's another part where we've seen AI really breaking down barriers and giving people access. And by simply giving people access to financial services, you are protecting them from a lot of the exploitatory behaviors that are out there for people that are taking advantage of people that have limited options.
Interesting, Dietmar. So AI is indeed breaking down the barriers for financial inclusion, at the same time protecting customer data in the customers and consumers. Andy, let's get back to you. So in the insurance industry, can you give us a peek into the future? What's your forecast on AI? How will it evolve, especially in your industry?
Well, I think the insurance industry is very interesting timing for us right now, because a lot of insurers are at the verge of digital disruption, with finding new ways of interacting with customers digitally, new ways of offering products and services. So I think my forecast is that this is going to continue. The move from the traditional insurers, where we hardly have any interactions with customers, to more and even maybe daily interaction with customers. And in order to do that, you really need a lot of data on customer behaviors and the preferences. So I think my forecast is that moving forward, more and more insurers will be looking into ecosystems and platforms as strategic tools to gather that data. And once you have data, of course, AI machine learning helps gain insights and make predictions on user needs and preferences. So AI, of course, can improve customer experience, and that's super important these days, as Dietmar mentioned, the younger generation and so forth. And then, of course, using that information to hyper personalize your content, personalize your products, personalize your service offerings. I think that's important. And I think of it as adding the human touch back into digital and making it more personal. And examples, of course, in the banking finance, you could do dynamic pricing, personalized product offerings, and even create new business models that were too complex to do before, without AI. And as more and more companies adopt these ecosystems of platforms, you'll see more and more standardized APIs, so that at a certain level, of data and services could be shared among partners. So moving forward, I think companies will need to figure out how to use AI on data from not just internal sources, but also from external sources from partners. And this is going to be very powerful, because it allows us to fill in the gaps in their knowledge of customers. Of course, moving forward with more AI adoption, AI governance, and ethical use is going to be, continue in importance as we use AI more and more.
A lot to look forward to in the insurance industry, Andy. You mentioned personalization, but there has to be an ecosystem and collect external data. Sasho, you're CTO of Valutex. This is a tokenized asset and security token exchange. So in your industry, what's your forecast? How will AI help this industry in the future?
Thank you very much, and hello again. I believe that there are about 6 topics which we can look into basically in financial industry. First one is anomaly detection, which is basically identifying, a lot of people talk about it now, identifying unusual patterns in order to minimize and mitigate the risk. The second kind of a direction will be intelligent pricing. So it will complement the traditional pricing models, establishing more accurate prediction and confidence intervals. I mean, pricing basically in our institutions is the holy grail. And as far as pricing is concerned, you lose or win clients basically for a basis point. So as far as the more accurate you are, the more competition you're going to get there, and actually the basis point will become half a basis point. This is good for the consumer. This is good for us, because at the end of the day, it will reduce the monopoly of the big ones, and it will allow the people, basically the small person, to participate, because it's affordable nowadays for them to participate. We're a long way of it. We're a long way of it, obviously, because still the institutional clients are the major focus. However, one day via brokers or via other places, like when we democratize actually the trading, people have access, and this pricing effectively enable them to take a lesser risk and get more kind of a fair return on the money they put in. Another thing which is important, we live on the news. Is fundamentally now it drives our society. So this direction will be, you will be aggregating news from various sources. Someone mentioned here for Andy in the insurance industry, external sources, this is where it's going to come from. Aggregating these various sources and producing analytics for the sentiment, summarization, topics for trading signals, all the stuff at the moment which is clearly a proprietary, heavily proprietary and guarded basically from the institutions. Again, it will allow people basically, imagine a bot which will give you a chance actually to analyze this data. I mean, think about it, your email, basically. We still don't have a clever email. I mean, we have email for thousands of years, and still email is cluttered with garbage. However, basically, we want someone to write a bot, and we have to collectively write something so that it can give you precise information about you're interested in. Don't spend time actually sifting garbage from a real thing, real matter. Again, going back to the pricing, it will be quantitative client intelligence. So you have access basically from multi-channel clients, different clients, because you got communications actually via Bloomberg, you get the chat, Symphony, all of them. And what you could do basically is actually sieve these channels and then be able to create even a straightaway trade out of the communication between salespeople and effectively the clients on the other side. Another holy grail, which is fundamentally been tried to be resolved for the last 100 years, is smart documents. We are swamped with documents. We are drowning in documents. And as far as I'm concerned, whoever creates a system which actually does that indeed in artificial intelligence way is going to be a big winner, because it will identify meaningful information, the insights of a lengthy text sources, which are, most of it is garbage, and then reduce the manual operations to improve the workflow. And last but not the least, the classic one, virtual assistants. How many times you get sitting on the phone and then waiting for someone to respond to you, and it asks you basically silly questions you have to repeat. Intelligence put in there is of paramount importance, and it will actually win you clients. The support of the clients actually in the future become even more and more, because we become more demanding. We have access to the world, we can see what happens around. And so because we're not living in our own world, basically we'll start demanding that we get responses on the client queries, chat, email, voice, basically with the goal to improve the service and to get the operational efficiency. Now, this is the nice picture. However, basically some data, really. So some analysis basically for the top line benefits, 51% of the recipients, basically of the people participated into the survey, says that artificial intelligence gives you to work more efficient, effective, and accurate. 45% are telling basically that you're going to reduce the business cost, and 42% are saying that it will improve the employee experience. That's the good news, but it's the bad news. Deployment, speed, and maintenance. 52% say basically it's hard to deploy. 41% saying difficult to maintain. 29% introduces too much complexity. About 50% are saying that the bots are harder to deploy. I mean, you think you've solved the problem, actually you don't. You actually created more problems. So on that note, I'll just basically want to bring reality. Yes, artificial intelligence, automation is to stay with us. We're not going to go away with it because we as a humans always aim to automate, and it's because we are lazy. We want to do something less and someone else to do the work for us. And this kind of a intellectual laziness drives us to move forward and to invent new things which actually help us to become even more lazier. Is it good or bad? The future generations actually will tell us if we're still alive or we are able to see. Hopefully it will lead to a different world, a better world. However, basically the world is not rosy. And I'll finish that one. Just remember how difficult it is to teach a child to become intelligent. It is magnitude more difficult to teach a machine, magnitude. So this is where we have to focus our efforts, and it's all about data. It's all about how we deal with the data and how we be able to find new ways of dealing with the data.
Wow, all right, Sasho. You mentioned the good and the bad side of AI. So the good sides, I picked up the dynamic pricing, democratizing trading, getting insight from mounds of documents. But the bad side, it's a good thing that you segued on the bad side. So the difficulty of implementation, the challenges in implementing AI, which brings us to the next topic. So Lito, what do you think are the dangers of using AI? So Sasho mentioned some bad side to AI. How do you see the challenges and threats of using AI against the bank, against the banking system, or even against the consumers themselves?
Yes, I mean, I was delighted to hear those words from our fellow panelists about the good and the bad of any platform or any technology for that matter. So for this particular question, I think, of course, I think everyone would agree with me that trust is an important currency that banks and customers rely on in every transaction. I've been telling, even the FinTech Alliance members, I mean, the industry as a whole, that, trust is the basic commodity that we are selling to our customers. And this is why the very real threat of AI being used in fraud against financial institutions is something that the industry and government regulators have been working on even before the digital shift has started. Across the industry and in terms of regulatory concerns, while the Open Finance Framework advocates for sharing of user permission data among industry players, government regulators are putting in place an abundance of key measures to keep this data within the bounds of what is legally possible for industry players to utilize. This is what the Philippine Central Bank, the Bangko Sentral ng Pilipinas, calls the consent-driven data portability, interoperability, and collaborative partnerships among financial institutions and third-party providers, which in essence highlights that the ownership of their data belongs to the users, and that the use of such data will be depending on the user's permission and within the bounds of the regulation. So within the company, choosing a trusted industry player to partner with is crucial when dealing with technology. This is why we have put in place standards that identify the best ones with years of experience in real-world data management and production. And on top of that, it has been helpful to align our company standards with that of the regulators or the BSP through a rigorous vetting procedure for technology partners. And as I've said, transparency fosters trust between consumers and the banks. And of course, what we have seen thus far across, I mean, the industry players, no, we have we are very much concerned, and you know, we put so much premium about compliance, no, and in fact, I just had meetings with the National Privacy Commission Chairman Monliboro, and we talk about AI on data privacy, no, and especially on credit scoring, and we've you know, we came up with a press statement in terms of supporting the National Privacy Commission in terms of having all the players in the industry to really comply with the standards, so with the Data Privacy Act. And I think in terms of having to police their ranks, no, insofar as them having to really uphold the highest standards of you know, data privacy compliance, and having to be compliant when it comes to setting the standards on corporate governance. I think our regulators, the private industry players, have bonded together to ensure that we, you know, we always put that premium insofar as consumer protection is concerned. Thank you, Ray.
Great insights there, Lito. No, you mentioned fraud as one of the threat, but you know, to address that is working with regulators, no, and you know, creating standards, no, around your you know, offerings, no. Dietmar, no, as a global you know, digital bank, no, same question. No, what are the dangers, no, of using AI that you see, and you know, how can you address those? No?
Yeah, so I'll speak a little bit more from the sort of internal perspective. So, you know, as a company using AI, what are the dangers in using AI? Because it's not, you know, it's not the be all and end all, and it's going to solve, you know, all your problems just because you're introducing AI into the organization. So, now, the first part is you need to be very, very clear on what the business objective is that you're trying to solve with the application of AI. AI can't solve 10 things that are independent at the same time. You need to be very clear on what the objective is, and make sure that the data that you use and the techniques that you use to solve that is applicable for that, to make sure that you get the best possible solution for that specific problem, because otherwise you're going to dilute the performance of the models, and you're going to end up with very, very little efficiencies or gains if you're trying to do too many independent things at the same time. So be very clear and very focused on your approach. The other one is really make sure you understand the technical assumptions of the techniques that you are using. These days, there's so much technology out there. Python, you download libraries, or you know, many other software, you know, licensed software. It's drop and drag. You know, you point a data set and you tell it what modeling techniques to use, and it gives you an answer. It doesn't assess the assumptions of your underlying data. It doesn't look at the structure of your predicted variable, and you will get an output, and you will get something that you can deploy. So making sure what you can deploy is robust and usable in production. Make sure you understand the structure of your data, as well as what are the technical constraints of the techniques that you're trying to use to model that data or predict behavior. And then the other one is, once again, related to the data, but make sure you understand the data, how the data was generated, what were the processes that went into generating the data, that you're fully aware of whether or not there were any biases along the way, any manual processes that might have skewed the data that you're seeing. Because one thing that AI is really good at is identifying patterns. And if in the past you had biases or specific processes that introduce a specific blind spot in your data, there's a very good chance that AI is going to amplify that. So a lot of people think, for example, if there's a very relevant example that a lot of people talk about. If you want to move away from sort of your gender inclusion, in the past a lot of your financial services was very much focused on males, and now you want to go broader and you want to have gender equality, and you're going to use AI for that. If you purely train it on the data that you have on hand, which was overweight to men, AI is going to assume that men are better than women because it just sees more men there, so it's going to have a bias towards that, and you're going to actually achieve the opposite of what you're trying to achieve. So really understanding your data, understanding how it was generated is key. Otherwise, the results are not going to be what you expect. And it's not just financial dangers. There are significant reputational dangers as well if you are not aware of some of the biases that you are potentially introducing into your practices.
Oh yes, no biases. No, indeed, it's one of the downsides of AI. So, gentlemen, it has been an insightful panel discussion with you. So, I'd like to thank you for your insights. So, AI is truly impacting the financial services industry, providing the good side, like fraud detection, cost efficiency, customer engagement, enhanced banking products, better security. But there is also the bad side to it, as mentioned by our esteemed panelists. So we need to be aware of those, and we need to manage our data and work with regulators. So thank you again, gentlemen, for that insightful discussion. Back to you, Bhavna.
Thank you.
Thank you so much, Ray, for that great moderation. Well, I had to, just say one thing to all our panelists. Firstly, thank you so much for being a part of our show today. And definitely all your experience has been great. And thank you for sharing all on the questions. Thank you once again.